want to pull up the stock of Neogen Chemicals. Let's see what that's doing. It's been on a roll, at least since the time I'll say it has been listed. It listed last year somewhere. And currently it's at almost life high levels at 485. Let's go across to the management. It is not... Even if you look at the quarter gone by, they've posted a profit. Profits are, by the way, up 2 times at 8 crore versus 4 crore, which was seen in the corresponding quarter. We're joined by Mr. Harin Kanani, who's the Joint Managing Director of the company, to take us through the highlights of the quarter. Mr. Kanani, good afternoon, and thanks a lot for joining us today on BloombergQuint. Congratulations on good set of numbers. The stock's been doing well since the time it made its debut last year. Take us through the highlights. What stood out in the December quarter?
So thank you so much for having me here. We got listed in the month of May, and basically before that we had done some investments and acquired new plants and added capacity. So basically in last 3 quarters, essentially last 4 quarters, we've seen very good positive response from our customers, and the demand has been on very high levels, which was what we had already projected. So the higher capacity, we were able to execute our plans well, and we were able to utilize it at the peak capacities, which is what has given us a growth. Also, I have to also give a kind of a clarification that last year we were in the process. So during the first 6 months of FY19, we were in the process of upgrading this capacity. So that's why kind of the base was also a bit lower. So some of the very high percentage growths which you have seen in the first 6 months and to some extent a bit in this quarter were for the fact that 9 months was when the capacity was coming online. And since Q4 or FY19, we've been running this at full capacity, which is what is been shown in the numbers.
Are you suggesting all your plants are running at 100% capacity right now in terms of utilization levels?
Yeah, so generally in chemical plants, multi-product, 80% is considered as peak utilization. And currently all my organic production capacities are running above 80% utilization. So yes, it's a peak utilization at the organic side. Okay. And I think, in the inorganic also, it has been more or less running at peak utilization. So now our additional capacity has come online in Dahej. We did some initial trials in last quarter, but it's now come fully online, full commercial production, regular commercial production. And we also received the site approval from customers, so we can start commercial dispatches going forward from the Dahej facilities.
Right. I remember at the time of the IPO, some expansion plans were going, and as you mentioned, even in Dahej, you were looking to expand capacity. At that time, yes, for organic chemical, you used to manufacture somewhere about 1.3 lakh liters of organic chemical. For inorganic, it was about 12 lakh kg. You can correct me if I'm wrong. What are the current numbers then in terms of capacity?
So in terms of organic capacity is 1.2 lakhs liters of reactor capacity. So that remains still the same. But now it's being used for last 4 quarters. It's been used almost at full level. The inorganic capacity, which was 1.2 million kgs of lithium derivatives, is now double. So that is at 2.4 million kgs. But this is the capacity where it's usually the approval process is a bit longer, and over next 2 or 3 years, we expect even full utilization of the existing inorganic capacity.
Okay, I believe you export nearly 36% as of now, if I look at the revenue breakup.
Yes.
Could you give us a sense, due to coronavirus outbreak, has that benefited company like yours? Are you getting more inquiries with regard to more export orders? Maybe China was exporting to certain countries, and right now due to production shutdown, they're unable to do so. Are you getting any additional export orders due to that?
Not because of coronavirus, but over last 3 to 4 years, there has been, China has been having some of the challenges, and more innovator companies in Europe, Japan, and US have been looking very closely at India and wanting to develop credible, reliable, long-term sources in India. So yes, that overall has been the trend, and that is what has been helping us, like in terms of more and more interest. But that is basically more relevant for our next expansion, which is already underway for doubling our organic capacity, which is where these molecules will come online and these businesses will come online. The growth that you've seen has largely come from existing customers' demand and our regular products and some of the new products which we've launched all the time.
Okay, Mr. Kanani, the entire money which was raised in the IPO, I believe of 135 crore, has that been deployed completely?
Yes, that was mainly for repaying the previous term loans that we had taken and for working capital utilization, which basically reduced the debt and allowed us to, continue more expansion for organic facility. So yes, all of that has been already deployed.
So how are you going
and part of the reduction in PAT and that you have seen is also, the improvement in PAT and reduction in the interest rates. Interest cost has come because of the deployment.
Okay, leave us with the guidance then, sir, for FY21 or maybe for the next 2 to 3 years for your shareholders, since you're a newly listed company. What sort of growth levels can they expect from a company like yours?
So FY21, our biggest challenge is that our organic capacity is already running full, and we expect the new organic capacity to come towards the end of FY21. So we have a bit of a challenge in terms of FY21 because we can get some additional business from the inorganic capacity and some by debottlenecking our organic capacity. But we have a better clarity on FY22 because once we have the new capacity installed in FY21, it will be enough for at least a 500 crore overall top line. And so we are targeting, let's say, somewhere between 450 to 500 crore in FY22. We also told in our conference call that a more clearer guidance on FY21 will be able to release by May because we are trying to do several other projects, to see what is the best we can do for FY21.